Thank you very much. First of all, I just wanted to thank ICMI and Mr. Shitranjan ji, Mr. Sanjay ji, for a warm welcome. It's always, have a pleasure to hear out from our regulatory. So Praveen ji, always we get a lot of experience shared from the regulator side. So it's an always pleasure. Thank you. So more or less, we had a technical session on the fintech side, but being ahead of listing, and we wanted to put out the capital market opportunities available in the IFSC, the India's first international financial services center. So I wanted to highlight more on that particular point. My presentation is more towards primary market opportunities for the Indian public companies as well as the foreign companies in IFSC. We are a 100% subsidiary of NSE India. We started our operations in June 2017. Our vision is aligned with the government of India, with where they look at the IFSC as a financial gateway for both inbound and the outbound investment. Also, we wanted to provide the hedging requirements for the investors. We received the CFTC and SEC relief. From that, it enables the US investors to participate directly in the derivatives contracts in the IFSC. In the last consecutive 2 years, we have received Emerging Market Exchange of the Year award in 2022, and one of our contract, GIFT Nifty, which was just on last year, which is rebranded from SGX Nifty to GIFT Nifty, which is awarded as a most innovative contract of the year last year. We are a multi-asset universal exchange. We have both inbound access product as well as the outbound access product. Inbound access product for the foreign investors who wanted to access India growth story, who wanted to participate in India through IFSC. We have equity indices, futures and options. We have 4 indices right now. Under equity indices, we have 182 single stock derivatives available. All the stocks which are underlying stocks on the futures which are available in the Indian market, this is accessible for the foreign global investors to access in IFSC. We have 7 pairs of currency futures and options. On the primary market side, we have a debt securities market as well as the equity listing. The last year, our Honorable Finance Minister has announced the direct equity listing for Indian public companies through IFSC, which I will cover in my later part of the presentation. And we have one beautiful product, which is first of the kind product available across the exchanges. So we brought top 50 US stocks in GIFT IFSC. So now Indian investors, without opening a account with the foreign brokers, now they have access to any top performing companies out of S&P 500s, whether it is Apple, Google, Microsoft. They can invest in through GIFT IFSC, and they have all the US stocks holding in their own demat account. GIFT IFSC is a tax neutral avenue, which of course the entities which are setting up the offices in IFSC, they have a 10 years tax holiday out of 15 years. Apart from that, for the investment purpose, there are no security transaction tax, no commodity transaction tax, no capital gain tax, no stamp duty. Even for the debt issuers, they have a withholding tax rate of concessional rate of 9% on interest payment on any of the bond listed on our exchange. This is one of the watershed moment, not only for the GIFT IFSC but also for Indian capital market. In July 22, we did the soft launch of NSE's SGX GIFT Connect by our Honorable Prime Minister Shri Narendra Modi. And following on the July 3, 2023, we had a full-scale operations where we did the entire liquidity switch from Singapore exchange, the contract which I earlier mentioned about the SGX Nifty, which has transferred to GIFT IFSC on NSE International Exchange. So this Gift Connect is also one of the is also a catalyst in the objective of government of India, where they are seeing the onshoring, the offshore. So the full scale transition that help connecting GIFT IFSC ecosystem with the international financial centers. Just wanted to give you a highlight in terms of all the Nifty contracts which are traded on our IFSC exchanges. We did the cumulative turnover since last 1 year, almost around $900 billion of turnover and around 20 million contracts. On the single day, trading turnover is somewhere around $22.88 billion, and the average open interest is around 15.22 billion. In terms of just a comparison, these contracts which are traded in the domestic market, in the onshore market, where average daily turnover is around $2.5 billion. On our exchange platform, the similar contracts which are the Nifty contracts which are traded is almost $4 billion. And if I compare the open interest number, it is $3.5 billion to $4 billion in the onshore market. In our exchange, it is average of around 11 to 11.5 billion. These top 50 US stocks, which I mentioned earlier, this is for Indian retail investors who wanted to diversify their portfolio and wanted to explore to the different geographies or different good performance global stocks. We provide the global stocks on our platform. This is unsponsored depository assets, which is the first time traded on any of the stock exchanges. This is the fractional shares which are traded on the exchange platform. So how you trade on the domestic market on any of the domestic stocks, the similar way now you can access the US stocks through the GIFT IFSC on NSE International Exchange. You can open your trading account with the registered member in the GIFT IFSC. You can open trading account, demat account, and the codes are available on the exchange platform. So similarly, post settlement, you get the custody in your demat account. So now you can access these US stocks and hold them on your own. Since our operations in the last 7 years, we have seen the CAGR growth of 93% on our total notional turnover. In FY18, our total notional turnover was around $7.5 billion. The last year, we have closed to around $750 billion turnover. And this first year of the first 3 months of this year, we have clocked more than $250 billion of turnover. So on the fundraising options, we have all the companies, the regulation is offer all the companies which are incorporated in India or in foreign jurisdiction or in the IFSC. They have both the option, equity or a debt raising. In equity, we have a different mechanism like IPO or a foreign public offer for sale. On the debt side, we have a foreign currency bonds, masala bond, green bonds, sustainable bonds, social bonds. So ESG bonds are also listed on our exchange platform. To take you to the journey towards the enabling provision on the direct equity listing, the last year our Honorable Finance Minister has announced the direct equity listing for Indian companies. Post that, the regulator has constituted a committee working group report where along with the ministry and the domestic regulator, they have put up the several recommended to have a listing for public companies on the IFSC jurisdiction. IFSC has already put up the regulations for listing. So in 2021, there are listing of security regulations are already out for the foreign issuers. But with enabling of Indian companies last year, so now both listed and unlisted companies can come to the IFSC and list their stocks over here. So now the company has both options available with them, whether if they have a requirement in Indian rupee, they can go to the domestic market and raise the money. And if they wanted to raise the fund in the dollar currency or any other currency, they can come to the IFSC and raise the funds. This is just the new regulation, which are just in the next 15 to 20 days, which are coming up. So just to give you some pointers that, the regulation over here are very simplified. So the standing committee, which has been studied for the international offshore centers and the exchanges. So the eligibility criteria for any of the company who they have an operating revenue of minimum $20 million in the last year, or the average of 3 previous year, or in based on the profitability test, it is at $1 million in the last year, or the average of the previous 3 years, or if the company is committing on the post-issue market capitalization of $25 million. So if they fulfill any one of the condition, they can come to the IFSC and list their company on the exchange platform. On the filing of offer document, we have a simplified regulation over here. So generally we see in the domestic market, once you file the document, you receive the domestic regulators comment within a month time or so. Over here, if the issue size is less than $100 million, so the regulator has given the exemption to the company to seeking the observation letter from the regulator. On the free float, in terms of the free float, either it is a $50 million or 10% of the post-issue paid-up capital, whichever is lesser. In terms of the key intermediaries, book running lead managers, auditors, legal counselor, they are the backbone of the companies who helps them in drafting the document, they are doing the due diligence, filing the document with the exchange and the regulator, as well as from the auditor, who are the responsible to examine the company's financials and providing the restated financial reports and other required certificates. This is the indicative offer timeline. So I generally divided into the 3 different sections. One, when it start as a IPO kickoff, when the company decided to go on a public. So they take the board approval, appoint the intermediaries, which start with the kickoff meetings. They do the due diligence and prepare the offering documents. When it comes to the second stage, it will take regulator approval and the exchanges approval. And the third part, which is the book building and the allotment. So post receiving the regulator comments and incorporating all the comments, the company file again the documents with the regulator as a final document before they start the marketing roadshow. So overall, the procedure is around 20 to 21 weeks. Depends upon the company's preparedness, how the company is ready. So ahead of the kickoff meeting is a primary when the company is ready, all the documents, all the reports, statements which are available in place, and they can, as fast as they can, start the kickoff meetings. So in terms of the value proposition, we offer the currency diversification. There are around 11 to 12 different currencies are available in the IFSC exchanges to raise the money. You have a wide range of global investors available from the different geographications. They are the global financial institutions, sovereign wealth fund, and the NRIs. We have the regulatory regime, which is very simplified and in line with the global practices. The cost benefit, the ecosystem over here, whether it is a regulatory cost or an exchange listing fees or any of the intermediaries fees, which are comparatively much lower than the other offshore centers. In terms of the better valuations, in IFSC, you get the access to the specialized industry-specific investor classes, such as high-tech investors to obtain more accurate valuations. So this is more or less towards the equity capital market fundraising. On the debt security side, we offer various category of issuers, whether it is an Indian, foreign, or a IFSC entities, public or a private company, whether it is a supranational or a multilateral agencies, or a sovereign bonds, or a municipality or a statutory bodies bonds. We have a wide range of product offering. We offer foreign currency dominated international bonds, masala bonds, which are dominated in Indian rupee. We also offer the MTN program to list on the establish on the exchange platform. On the ESG side, we offer the green, social, sustainable, and sustainability linked bonds. We also offer a sustainability side. We have a recognized framework from the Climate Bond Standard Certified, ICMA, Asian Capital Markets, and the Europe Commission. So the company can adopt one of the recognized framework permitted by the regulator over here, and do the independent external review from either from the secondary party opinion verification certification on the pre-issue or the post-issue of the fundraising. And these are basically a main disclosure on the to list the ESG compliant bonds. These are the companies which are listed on our exchange platform: the REC, Indian Oil, PFC, Bank of Baroda, HDFC, NTPC. So there are just a few names that we have put up, and already 50.8 billion of MTN program has been established on the NSE International Exchange. So just to give you a value proposition that for raising the debt on IFSC, we have a very efficient listing process. The turnaround time is just a 1 day, a very simplified listing application and agreement. You have access to a wide range of international capital and diversified investors. You can have an option to raise in the multiple different currencies. The major part is the significant cost saving in the listing fees, regulatory fees, and which compared to the offshore exchanges. We have a dedicated international sustainability exchange platform which is dedicated for the ESG label bonds. The other major part, which already I highlighted, is lower rate of 9% withholding tax on interest paid on the debt securities. So earlier, when the debt issuers, when they were going outside India, listing on London, Luxembourg, and Singapore, now we have they have a preference over the those offshore centers. Over there, if they go, they have to pay the 20% interest rate on the 20% withholding tax on the interest rate payment. Over here, they get the benefit with the 9% only withholding tax benefit. Yeah. Thank you.